Mr. Prime Minister, you have said you do not expect a double-dip recession here in the United States. It's not part of your base case for the Canadian economy. But the market does expect one. You can see it in bond yields, for example. And many of the most respected economists say the chances are 50% or better. So what if they're right?
Well, look, we're always watching markets and watching economic developments very carefully, and we're prepared to adapt our policies if need be. But I don't think that policymakers bet on worst cases. Obviously, our job is to provide good governance, both to our own national economies and collectively to the global economy, and try and steer our way forward. I still think there's every opportunity for governments to muddle through and keep the recovery going, although, admittedly, we are looking at a period of very low growth.
Have your expectations decreased, shall we say, in recent months?
Well, look, I always tell people, Eric, I'm not an analyst. My job is not to analyze the economy. My job as Prime Minister of Canada and one of the G20 leaders is to advocate and do things that will help the economy move forward. And, I believe if these problems are tackled, and obviously there's some pretty serious problems on the horizon, if they're tackled, we can continue to move forward. But I don't think anybody around the G20 table underestimates the magnitude of the challenges that face our economies, particularly those in the advanced industrialized world.
How much of a risk do you believe Europe poses right now to the global economic picture, and in particular, the economic picture for the developed world? Could it be, say, another Lehman Brothers, and we know what happened after that?
Well, look, I think this is obviously the biggest immediate threat on the horizon. In fairness to our European friends, they have repeatedly made clear to us and repeatedly acted in a way that would avoid a cataclysmic or a catastrophic event like Lehman Brothers. That has been their goal all along. But obviously they have a serious sovereign debt problem, an immediate sovereign debt problem, an issue, and I think it's clear that all of us are looking for them to come up with a solution that will move us forward in the midterm. And I know they continue to juggle what is a very difficult problem, but I think everybody agrees that we need to see some real solutions that are going to last and move us forward.
What is a real solution in your mind? People talk about, you're absolutely right, we have not seen a cataclysmic event just yet, but many people would argue that if anything, they've just been putting off the inevitable. Are they raising the risks to the global economy by doing that, say, putting off a Greek default?
Well, look, I think, once again, the thing I want to emphasize is they've taken measures to avoid catastrophe. We have not had a Lehman Brothers type event in Europe. Our European friends seem determined to avoid that. Clearly, the sovereign debt problems in Greece and elsewhere are very serious. Clearly, we don't yet have a solution that truly gets us through them. In fairness, these are not easy problems, but we give our advice to them confidentially, obviously, on how to handle these matters.
Understood. Given the fact that the economic outlook for America is weak, do you feel you've done enough to wean Canada off of its economic dependence on the United States?
Well, look, I'd say we have a lot more to do. One of the objectives of our government has been to diversify Canada's trade. It's kind of shocking that when we came to office, our government came to office in 2006, in spite of the fact that Canada is one of the most trade-dependent advanced economies in the world, we had trade agreements with only 5 countries in the entire world. We had one of the lowest number of bilateral trade agreements of any trading nation. We've now got agreements with 14 countries. We're negotiating with 50 others and taking other measures, such as negotiating foreign investment promotion and protection agreements to try and diversify our trade. And our trade is being diversified. But look, we're under no illusion that we are very tied. The Canadian-American economies are highly integrated. That's a fact that's, I think, going to be a dominant feature of the Canadian economy for many years to come. And we don't walk away from that. That's one of the reasons we're working with the Obama administration on what we call perimeter and security measures to enhance our integration, enhance our access in a period of heightened security, and also we have important initiatives on regulatory cooperation. So, look, we have to diversify our trade, continue to, but we're not going to pretend that we're not going to be closely tied to the American economy. That's frankly one of the great assets most of the time for the Canadian economy, and we want to work with the Obama administration bilaterally and through the G20 to do what we can to move the continent forward.
What's a sensible medium-term target, call it then, for the share of Canadian exports that come from the United States? At one point it was above 70%. Where would it make sense for that to be for Canada's security?
I don't know that you can easily put a number on it. We'd obviously like to see the trade dependence on the United States fall, and it has been falling gradually over the past couple of decades, not markedly, but it has been falling. But look, there's no way of getting around the fact that the Canadian economy will always be affected by developments in the United States, which is why we try and work positively and helpfully with our American neighbors to find solutions to our joint problems.
Well, one of the things that has taken place as the dependency has lightened, let's say, is that the Canadian dollar has become a safe haven currency of all things. On balance, is that good or bad for Canada?
Well, look, the Canadian Prime Minister, as I think you know, most leaders try and avoid commenting on the value of their currency because it's the purview of the central bank, the Bank of Canada. Look, I think overall, the fact that you see the Canadian dollar much stronger today than it was, 5, 10, 15 years ago, is a reflection of the strength of the Canadian economy. Obviously, there are concerns, there are problems. The governor of the bank himself has noted on several occasions that a speculative or artificially rapid rise in the Canadian dollar is a significant drag on Canadian growth. It is one of the problems Canada has. As you know, our economy has a number of strengths that are reflected in that: the relatively strong fiscal positions of governments, our falling tax rates, our strong banking system. But there are some clouds, and one of them is the upward pressure on the dollar creates some practical problems for Canadian producers.
I'm going to switch gears for a moment. Election season is pretty much underway here in the United States. I'd like to know...
It seems to always be underway here in the United States.
That's probably true.
Yeah.
Whose worldview is closest to yours? President Obama's, Rick Perry, or Mitt Romney, say?
You are definitely not going to get me to comment on that. Our position as the government of Canada, I lead a conservative government in Canada. As you know, we're strongly committed to Canada being a low-tax, competitive economy in a global marketplace, and those are the policies we pursue. I've always been clear that I think the interests of Canada and the Prime Minister of Canada is to work with whoever the American people decide should be their leaders. We have a great relationship with President Obama in terms of not just joint cooperation on the economy, but on other matters. And as long as he is the President of the United States, we'll make sure that relationship is as productive and positive as possible, not just for Canada, but we do try and emphasize to our American friends that we don't just are concerned about ourselves. We understand the important role the United States plays in the world, and we want to try and be helpful to the United States as it navigates not just our own continental problems, but the wide range of global challenges that face us.
Is this administration's, or at least are this administration's policies helping or hurting Canada right now?
Well, I'd say, in Canada, unfortunately, we always tend to focus on the things where we have a disagreement. We obviously have a disagreement with the Buy America provisions of the latest U.S. jobs bill, although I think on balance, I understand why the Obama administration is pursuing a jobs bill. I think that's a positive measure. We have in the past been very clear that we think putting protectionist measures in that is not helpful, in particular when we have integrated supply chains across the border. And as you know, the American business community is as clear and outspoken about this as we are. But look, on balance, we should be under no illusion. On balance, the economic policies and cooperation that we have with the Obama administration is on balance very positive for Canada.
Prime Minister, the U.S. State Department is scheduled to rule by year-end on the Keystone XL pipeline from the Alberta oil sands all the way down to the refineries on the Gulf Coast. The project is big, $13 billion, and it is somewhat controversial. What happens if it doesn't get built? Does all that oil in the ground in Alberta go to China instead of here to the United States?
Well, look, it's hard for me to imagine that the eventual decision would be not to build that. The The economic case is so overwhelming. The number of jobs that would be created on both sides of the border is simply enormous. The need for the energy in the United States is enormous. The alternatives for the United States are not good, and on every level, not just economic, political, social, even environmental. The case is very strong for this. So I'm confident it will be built. But look, the fact
you've got other customers.
The fact that there are these kinds of pressures to take decisions, potentially take decisions which would, in my judgments, be complete, to avoid a decision that would be a complete no-brainer. All the more reason why Canada should look at trade diversification, and particularly diversification of energy exports.
People are scared of Saudi Arabia because of all the oil it controls, but Canada's oil reserves may be even greater than Saudi Arabia's. Should we begin to be more scared, let's say, of Canada as a world oil power? Because people aren't yet.
No, no, there's no reason to be scared of Canada. I mean, Canada is, in particularly, already, first of all, American audiences should know, and I think most don't know, that Canada is already the largest supplier of energy to the United States. But we're not just the largest supplier of energy. Because we are the largest supplier of energy, we are the greatest factor in American energy and national security. Canada is a democratic country, the ultimate friend of the United States, and a market-based player. We don't use oil or energy projects as strategic resources to achieve
foreign
policy or political ends, and of course we would never do that to our great friends in the United States. So this is why Canada is already the largest energy supplier of the United States, and integration of Canadian-American energy markets is a great thing, not just economically, but politically and strategically for both countries.
Some Americans wonder, though, how long that might remain the case if, say, more Chinese capital goes into developing the oil sands.
Well, Chinese capital and other capital is going into the oil sands. But look, we're insistent. We watch these investments very closely to ensure they're economically oriented investments. We will not have our resources used to further the foreign policy objectives of other countries. We're pretty clear on that. And obviously, we share broad strategic interests with the United States.
In a similar vein, Research in Motion has had a rough ride lately. Right. You're probably aware of that, and is widely considered a takeover target. Is RIM the kind of Canadian champion that, in your mind, needs protecting the way potash was protected?
Well, every situation has to be viewed on its own merits. I'm not going to comment on what is a completely hypothetical scenario. Obviously, we're very proud of RIM. I know that company has significant challenges. I'm not going to get into the affairs of private business on which they know far more, the management knows far more about than I do. But look, Canada has a pretty wide open foreign investment market. We do have a review process. But through that review process, historically, there's only 2 takeover bids we've ever refused. So this is an open economy that wants foreign investment, but also at the same time, obviously, we do want to see Canadian champions make their mark in the world.
Is that to say it's a pretty high bar, and RIM might not clear it?
I think you should not read anything into what I'm saying on a specific transaction that is at this point completely hypothetical.
Prime Minister, we talked a few minutes ago about the risks that Europe's economy poses to global stability, financially, economically. What about China? They've got this growing pile of foreign currency reserves. Yeah. Is that, you're an economist, is that an inflationary bubble waiting to explode? The other half of the global imbalance?
Well, look, China has its own struggles, its own challenges. I've talked to Chinese leaders about these things in great detail, but overall, notwithstanding some of the frustrations I know we have with Chinese economic policy, in particular with exchange rates, that the growth of the Chinese economy has been a very positive thing for the globe. In particular, obviously for Canada, it's sustained commodity prices that are a very important part of our economy. We just want to make sure as we work through the G20 that the Chinese and everybody we say should be looking at these economic questions not strictly from a national interest point of view, but from what we call enlightened sovereignty, to understand that in the global economy we're involved in, that sovereign decisions are part now of a great system. And when you're running the second largest economy in the world, as China now is, if you don't take decisions that are not just good for yourself, but good for others, that you do run the risk of destabilization that will ultimately rebound on all of us. So, you know, we work carefully with the Chinese to try and push them in the right direction on some of these matters.
Well, in light of that, would you say the Chinese yuan is strengthening at a fast enough clip?
In terms of the currency?
Yes.
Look, we think that we're highly committed, in spite of, as you noted, the upward pressure on the Canadian dollar and the problems it creates. We're highly committed to flexible exchange rates. We think in a global, integrated global economy, and this is an essential feature of stability. And yes, we believe that nations should not be pursuing competitive devaluations, and nations should be allowing the greatest possible flexibility in their exchange rates. And the Chinese understand well that that's our position.
Yet that's not what's happening. Everyone knows to what benefit it would be to the U.S. or to Europe to have a weaker dollar, to have a weaker euro. And some would say that quantitative easing, for example, has helped to make that happen. The U.S. dollar is weaker than it has been in the past.
And that has caused some frustration.
Frustration for you?
Frustration, I say, probably others have been more outspoken about that than we have. I understand the reason that the Federal Treasury has adopted some of those policies, and I think, you know, some of them have, you know, in the context of current American situation, are sound policies. Chinese situation is a little different, and we do need to see more flexibility in the exchange rate there. But we should not be under any illusion. The growth of Chinese exports is fueled by a large number of factors, and not simply that one.
But while the developed world is trying to pick itself up, trying to goose exports, trying to get back on its feet, weaker currencies help in that regard. And if that happens, it's going to drive hot money into emerging markets. We could see capital controls reestablished, go back to the way things were in the 1990s. Are we headed back into a currency war?
Look, I think one of the things that everybody has to be aware of, if you don't have flexible currencies and you don't respect, the fundamentals of the marketplace, you do run the risk that you get into worlds of capital controls or even worse, protectionism. And I know that is something that the Chinese and everybody around the G20 table wants to avoid.
Prime Minister, a pleasure speaking with you.
Thanks for having me.